Stock Talk. Okay, why can't I do the 10-minute trader stream? Streaming not allowed. Dividend stock.
I can't answer that question.
Okay, TikTok's not allowed.
I can't tell you. You probably have to re-log in.
Alright, well, that seems to be working at the moment.
Does YouTube seem to work?
I don't know. Let's find out.
You are live.
On which one?
You are live. Dividend stock talk. YouTube.
Oh, cool beans.
Administrator.
Double jolly good. Thank you. Thanks, Bocce.
You're welcome.
Talk to you later.
All right, have a good stream.
Yep. Okay.
It was another very busy week here at the Trump White House.
Right there. There we go. Jolly good. Uh-oh. Give me a second. Getting started. Mirror that, and this over here. I'll be right there. John Butschultz, how are you doing today? Okay, there. Rolling, and we seem to be doing fine everywhere. All bloody right, and here we go, laddies. Turn that fan off, it's not hot yet. All right, let's see who's here tonight as we get started. So, let's see what we got here. Hey, Rich Bruner's here tonight. Haven't seen you for a while, Mr. Rich. Fabian, what's happening? Michelle, good evening. Danny Sharrock, cool beans. Nutty Professor, cool beans. Yolanda. James Roshu, how are you? MJ, what's happening? Jennifer. Cesar, que pasa, amigo? Hawkeyes, what's going on? Good evening. Rich Bruner, good evening. Cesar. Hola, senor. Patty, good evening. Tony from Canada. Oh, Canada. Rolando Valenci, cool beans. Tatted up Ginger, what's going on? Rose Gold, good evening. Steve Mayer, good evening. So, it is Tuesday night, 9:20 p.m., 3:25:25. We're coming up to the end of the first quarter. Well, the end of the first quarter, you guys should be excited about that. I'm kind of curious how all you guys are doing. So at the end of the first quarter, we're going to take a little bit of test, see who did really good. My hair's a mess. I was out. I was out in the pool with the grandson today. That was fun. 5-year-olds has a tendency to just suck all the energy right out of you. Kind of weird, though. Uh-oh, YouTube's not up. Uh-oh. They're both working. Oh. All right. Hold that thought. Display. Give me a second. Getting it all ready to go. A little bit more, a little bit more, a little bit more. That should be it. Right there. Bloody jolly good. All right, so. Oh, wait a second. Hold on. Give me a second. Getting it all ready to go. A little bit more, a little bit more, a little bit more. All right, that should be it. That should be it. Should be good to go. And there it is. Right that should be it. All righty, so let's get out of that one and get back to this one. And there we go. All ready to roll. All right. Tony, check it out. What do you think? Good evening, sir. I see you on YouTube. I have 2 YouTubes. Allie Robinson. Hey. Jonathan Kaiser. Hi. Melodic Angie, how you doing? Mikey, hey James, what do you think about Marvel? Ooh, Marvel was on the list this week. King Derp, and it's gone. Double jolly good. All right, so that should be it. So let's take a look at the first one. Look at Mikey wants to take a look at Marvel. Marvel. There we go. All right, Marvel's going to be first on the list. Yellow. Marvel, MRVL. Here we go. Marvel, woohoo, MRVL. The high, the low, where was it? Where is it? Look at the movement. Sideways down, up, 71.86 to 72s for this week. Holy cow, 110. Next week's 72 is going for 217. Well, that's a good one, 217. I'd probably want to do this week's and pick up that 1% that's left. There's only 3 days left, Wednesday, Thursday, Friday. So get 1% on 3 days. Oh, excuse me. Getting 1% on 3 days. Well, that's not that bad. Think about it, because I'm looking for 1% a week. Yay, baby! What's happening over there in the Instagram world? Woohoo! All right. All right, so the numbers look good. Let's check out the chart. I got to move that over just a little bit because it's not quite showing. There it is right there. All right, a year ago, Marvel was at 65.12. The bottom of the year was the beginning of August, 53. Now, the last 90 days, okay, here's your last 90 days. Here's your high. Here's your low. That's where it was. This is where it is now. She went up, big gap down, up, back down, sideways, and now we're at 71.67. Before we jump in and jump for joy, let's take a look at Marvel. What does it normally do? Normally, well, I like the seasonality chart for that. Now, if you don't know what a seasonality chart is, let me explain to you briefly. Okay, all the way to the left is January 1st. All the way to the right is December 31st. The blue line represents the movement for this year. The red line is 10 years of data. So that's 2015, 2016, 2017, 2018, so on and so forth. But this is the average movement over the last 10 years. That's what it normally does. Now, it doesn't guarantee anything. It just gives us an idea. The status quo, or business as usual, that's what she usually does right there, that red line. It's an average of the 10 years. So, what can we expect in the next couple of weeks? Well, this blue dot right here, well, that represents today's movements. So for that, we're going to left click on that, slide it to the right, and as soon as that little gray line opens up, that's about 2 weeks. All right, so over the next 2 weeks, take a look. See, the blue dot, that's where we are right now. That's today. Nice upward trend and then going sideways before she pulls back into the second week of April. Well, that gives us 2 or 3 weeks to play with this thing. I'm okay with that. So let's take a look at the numbers. Now, I'm actually going to do a practice run on this one because I like Marvel. But before I do that, I got to go through the introductions, you know, the ifs and theirs, buts, all that kind of stuff. Number one, I'm not a trained anything. I did not go to college. I may have visited college, but I didn't go to college in the traditional fashion. Okay, so I don't have any degrees. I'm just your average everyday guy that had an own manufacturing company about 20 years ago, and I made so much money I had to figure out what the hell to do with it. So how else do you get good at trading? Well, you get really bad at trading at first. Ryan DeVito, how are you doing today? So 20 years ago, I had a manufacturing company, and I was pretty good at what I was doing. So much so, they kept throwing money at me. So what the hell did you do with the money? So I had to find places to invest it. So, stock market. Why not? Here's the thing. My first 5 years weren't that good. I lost a lot of money, and I made a lot of money. But it wasn't until 2008 when my 9-year-old daughter jumped on my lap and said, Daddy, what are you doing? Can you teach me? That's an odd request from a 9-year-old little girl. All right, so here's the thing. To teach a 9-year-old little girl how to trade stocks, it has to be simple. It has to be safe, predictable, consistent, and no way for her to lose. 5 things. So I came up with 5 rules. Rule number 1, never buy something you don't understand or you don't want to hold on to. Okay. Number 2, never sell for a loss. It defeats the purpose of the whole game. Yes, it is a game. Rule number 3, make sure the company is consistently profitable. Rule 4, weekly options only. Rule 5, make sure the numbers work. Okay, all that being said, I'm going to go through all those rules and whatnot as we progress through the evening. I'm actually even going to do a couple sampled trades so you see what it looks like. So when I say simple, I want it to be an easy strategy, something for anybody to pick up quickly. Safe? Well, I don't want anybody losing any money because that would defeat the purpose of investing in the first place. You want to put your money someplace so that it will be there for you as you progress forward, because eventually everybody's going to retire and your money's going to come from somewhere. Okay, simple, safe, predictable. I want to know how much I'm going to make before I even do the trades, and I'm going to explain that as we progress. Dawson's Creek, how are you doing today? Block Lords, what's going on? Joe Dia, what's happening? Dia, good evening. Kyle Walker, Clorox short. Kyle, we're going to take a minute to explain things first before we take a look at Clorox, all right? Simple, safe, predictable. I want to know what I'm going to make before I even do the trade. Is it going to be worth my time and my effort, or is there a better place for me to put my money? And consistent. Now, when I mean weekly consistent cash flow, well, I want a stock that has a weekly stock option. Okay, so I'm going to buy a stock and I'm going to sell a stock option against. Basically, I'm buying it for one price and I'm selling it to somebody else for the exact same price or as close as I can to the exact same price I just paid for it. So an example, this stock right now is at 71.86. Okay, so 71.86, and with a stock option, you have what is called a strike price or an agreed upon price. And for this particular stock, here they are. 68, 69, 70, 71, 72, blah, blah, blah. So if I'm buying it at 71.86, the closest strike price or the closest price I want to sell it to would be the 72. Okay, but what is the 72 price right here? The ask price, because that's what the price of the stock is. Okay, so if I'm buying the stock, MRVL, I'm going to buy it at the ask price. You get the bid, what I can sell it for, and the ask, what I can get to it, is going to be the 72. Now, I want to sell this week's, only 3 days left, and it's paying $1.10 per share. Now, we're going to do an example on this one just to show you how simple and easy it is and what the rate of return is going to be. So before I go any further, please remember, I am going to answer each and every individual question. If you put a question up on the board, I will read it and I will answer it. Okay? I don't ignore questions. I read each and every single one of them. So right around 11:15, I'm going to stop looking at stocks and just answer questions for the rest of the night. So please do me a favor. If you're going to ask me to take a look at a stock, make sure it has dividends and make sure it has weekly options. Okay, now when I say never buy a stock you don't understand, so by understanding the stock, you should know whether or not it has options and you should know whether or not it has dividends. Well, other than that, you'd be neglecting rule number 1. Never buy something you don't understand. If you don't understand it, if you don't know what the company does, if you don't know what the 52-week high is, the 52-week low is, how consistently profitable they are, well, then you really shouldn't be playing this game. Because you can lose your money. If you're not paying attention, you might lose your money. So why would you play a game and not pay attention to the rules? It boggles my mind sometimes. Make sure the company's consistently profitable. Weekly options. So if I'm buying it tomorrow morning, 71.86, I'm going to turn around immediately within 2 to 3, 4, 5 seconds and sell it to somebody else through what is called a covered call. Covered means it's a safe trade because I own the stocks. So if I buy the stocks, 71.86, I'm going to turn around and sell it to someone immediately for 72. And for the privilege of being able to buy it from me at 72 between now and Friday, they're going to pay me $1.10 per share. Now we're going to show you exactly what that means in a little bit. So let's do this one and see what it looks like. All right, here's the last 90 days, the last 30 days. Now the reason why I want to look at the last 30 days, because the last 30 days gives me a good idea of where the stock may end up by this Friday. Okay, so 30 days ago we were at 95. Next day is our 30-day high. It looks like it's 96 and 97, somewhere in that area. Then from there, she just drops and drops and drops, and right here, right around 310, which is the 10th of March, hits the bottom right at 64. Comes back up, goes sideways for a little bit, jumps up Monday, is up again on Tuesday, but it is slightly going towards the upside. 30-day high, you got your profit taken, stock drops. Down here, people saying, all right, this thing's 65, let's buy some. Now she's going back up again. Simple. I buy it at 71.86, I sell it at 72. Let's see what it looks like. Now, seasonality gives me an idea of what it normally does this time of year. We've already looked at that one right there. See, here's the blue dot, which represents today. There's 10 years worth of average movement. For the next week and a half, or next 2 weeks, this thing's going to go up and then sideways, which is above where I'm going to buy it at the moment. So let's get out of that. And let's actually do a trade on this one. Get rid of that. I'm going to change this right here to a covered stock, which means it's covered, means I'm safe, that kind of scenario. So covered stock, there we go. Now I want to do the 72. Very important that you pay attention to this right here. The date, 28 March 25. That means these options here expire this coming Friday. If this number doesn't look good enough for you, go to 4 April. That's next Friday. If you don't like that one, go to 11 April. Okay, that's 17 days away. That's 3 weeks away. Okay, so let's just do this week because the number looked pretty good. I'm going to buy that. Now I'm going to change it because I have mine preset for 10 contracts. So I'm just going to show you one contract so you know however much money you have, that's what you divide it by to do one contract, do 5 contracts, 10 contracts, whatever you can afford. All right, so here's the order right here. Buy one covered call of Marvel, MRVL, 100, that is the weeklies, 28 March 25. Well, that means this option is going to expire this coming Friday. So there's an old term. It goes something like this. Shit or get off the pot. Okay? Do it, don't do it, but you have a certain amount of time. between the time you pay for the option and the time the option expires, 28 March 25, which means it's going to be 4 p.m. this coming Friday. So they're either going to buy it or they're not going to buy it. Either way. The option expires on the 28th. The $72 call strike against the Marvel stock at the market to open. 2 orders. It's 1 order, but it's 2 trades. I'm buying the stock and I'm selling the option. 2 trades. Here's my break even, $70.64. Well, it's at $71.86. My break even is $70.64. So as long as the stock is above $70.64 come this Friday, well, I have a profit. How much? Well, the maximum profit, $136. So let's get the calculator out and figure out exactly what that is. Calculator, here we go. Okay, so we're going to take the profit, 136, and we're going to divide it by the cost of the trade, including commissions and fees, $7,064. $7,064.66. All right, that equals 1.92%. Now, I'm looking for 1% a week. Marvel is offering 1.92 for 3 days, Wednesday, Thursday, Friday. Well, that works. For the fun of it, let's take a look at what next week's going to do. All right, so let's get rid of that. And let's change this right here to the 4th of April. Okay, almost the exact same order. Listen closely. Buy 1 covered call Marvel 100, that's the weeklies, for April 25. That's not this Friday. That's next Friday. Right, next Friday. The $72 call strike against the Marvel stock to open. Break even is $69.54, basically the same thing. My profit, however, is $246. Now look at my investment, $69.45. Well, let's get the calculator out again. Okay, profit is $246. What is it costing me? $6,954.67 for a grand total of 3.5%. Well, 3.5%, that's for a week and a half. Now, if I get 1% every week, that's over 50% per year. And a lot of people thinking, you can't get 50% a year. Yes, you can. I've been doing it for 15 years. Now, I do share my trades. So if you want to go to the website, in the bio. Okay, now I have 7 channels going. 7. Okay, we're going to open up to a few more channels eventually. But each and every channel, you can go into the bio. So, all right, who's this guy? What is he doing? Click on that, and it will take you to my website, which is The 10-Minute Trader, right there. Okay, so down here, these are all my trades for 2024. Okay, have at it, read them. The calculations, I got to redo them. It's just not the greatest in the world. But here are weekly trades for 2025. Okay, now I haven't finished the calculations on these either. But week 5, first quarter, just click on any one of those. Here's all my trades. And no, red is not bad. Red is good in this instance. Green is what I bought. Red is what I sold. So most people think red is bad. No, not in this instance. It's not, but there you have it. All right, stop that video. That ought to work. Save that one. There we go. And there we go. And there. All right. That being said, you can go and check each and every one of my trades that I have done. Okay, week 5. Check that out. 3.88%. Nice. Anyway, I'm looking for 1% a week. Let's get out of here. All right, get the calculator out of here. Get this out of here. Get this out of here. Get this back to where it was. right there, and back to where we started again. Okay, so that's Marvel. I do like Marvel, and it. Okay, Levi the Beast. Can you say hi, Levi? No, Levi, I can't say hi, but hi, Levi. Oh, Luigi wanted to take a look at Nova Nordisk. What is it? NVO? NVO. I told you to come back today. We'll take a look at it. There you go. All right, I'm going to say no to this one for this week. Sorry, dude. Take a look at the numbers. Okay? Here's your high right here. She's dropping, 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 dropping. Look at where we are right now. Today is the new 30-day bottom. Actually, it looks like it could be the bottom of the year. Is it? It is. Okay, it went from 150. Now, remember I told you guys, so for those of you who are new here, you probably didn't hear this, but those of you who have been here before, remember I told you never buy a stock unless you are comfortable with the fact that it could lose 50% within a year. 148 is the high. Right now, we're at 73. That's a 50% drop. Could it go lower? Yes, it can. Is it going to? We will see. Because at the moment, right now, we have, look at the last 90 days. 90 days, 90 days, right there. Okay, big drop, down, up, down, up, down, up, down. Okay, so as soon as she finds the bottom, okay, I probably wouldn't be able to get into it until Monday anyway, because I like 2 days to the upside. So if this is the 30-day bottom, tomorrow could be a higher day, and that means Thursday would be a higher day, and then I'd be able to get it on Friday or Monday, depending what the numbers look like. So we'll take a look at it. We'll keep an eye on that one for tomorrow. So let me write that one down. NVO. NVO. So sorry about that, Luigi. Natasha Smith. All right, thank you for that, Natasha. Question. I did 2 calls with Riot. Estimated credit was 60. So it generated 500 a week. I just need to up my stocks to sell enough calls to reach my goal. It sounds about right. But Antoine, always be cautious not to put all your eggs in one basket. Okay, like don't put all your money into just one. You need some kind of diversity. Nobody, why are you being rude? You shouldn't talk to people like that. Your channel will be reported with this content. Wow. Okay, thank you. Luigi, appreciate it. You're welcome. All right, so Block Lords, good evening. Dawson's Creek, good evening to you. Tree Squirrel, what's happening? Kyle, you want to take a look at Clorox for a possible short? Well, Kyle, I'm going to disappoint you in a manner. I don't short stocks, and definitely I don't do monthly optionable stocks. So Kyle, see this right here? 17 April, 16 May, 18 July, 17 October. Those are all months. Monthly options don't work for me. Okay, when I say I want consistency, weekly cash flow, I can't get weekly cash flow from a stock that has monthly options because you can only trade a monthly option once a month. So that's 12 times a year. So what am I going to make? 12 to 24% per year? Nah, no thank you. Okay, right now I average over 1% per week. That's what I'm looking for. 1% per week. The only way to get 1% per week is with a weekly optionable stock or sit in front of the computer all day looking at charts. Yeah, I ain't going to do that. No, I'm not going to do either one. I want weekly options because I want weekly cash flow. Now, I've been getting weekly cash flow for a very long time, so it doesn't make sense for me to look at something that doesn't fit. All right. Tony, can I check YouTube? Are you talking about YouTube the stock or YouTube the channel? Live Boxing, how are you today? Uh-oh. Evening. Tatted Up Ginger, how are you doing? YouTube not up, we did that one. Oh, Melodic Angel, I need to schedule a call with you again about your Patreon. Okay, Angie, you know how to get a hold of me. DM me here on TikTok with your number, and I'll give you a buzz either tonight or in the morning, whichever you prefer. I keep having trouble understanding the credit debit for rolling, trying to figure out profit. Okay, that silver guy, let's take a quick look at that. Let's go change it to this account here and go to here. And let's take a look at US Steel. Oh, let's take a look at Riley. Why not? All right, before we do that, put Riley here. R-I-L-Y, Riley. All right, so let's just do Riley for a second. Okay, here's the high. Here's the low. Here's where it was. Here's where it is. Now, remember I told you, if you are not comfortable seeing a stock that you buy at $40, see right here's the high of the year, $40. Well, now it is worth $4. Okay, if you're not okay with that, don't be playing this game, because that can happen. Okay, well, whoever bought this actually did happen to. So here's the high, drops down, goes sideways for almost, looks like about 8 or 9 months. Okay, right now it's at $4.05, and yes, I do have to own some Riley. And no, I did not buy it up here. I bought it down around here, which made total sense to me. All right. The last 90 days. Okay, here's the last 90 days. The high, the low, where was it, where is it? Now this looks a little bit better, because your high is right around 7.25, and your low is around 250. Okay, so it's sideways, dropped, shut up, pulled back, now we're right here. All right, so what's going on? Last 30 days, right there. Here's your last 30 right there. Okay. Shoots up, pulls back. Now she's dropping. Now I do own some of this, so let's take a look at the rolling it forward. All right, that silver guy, you ready for this? First thing you want to do before you do anything else is, if you own the stock, is find out where it is and where it looks like it's going. Okay, you got a 30-day high, you got your 30-day bottom right over here, shot up, pulled back. So what's it doing now? It looks like it's just going sideways at the moment. So here's where it is. Now I want to roll it forward, so what I do, I take my cursor, bring it on top of Riley right there, right click, okay, create a rolling order right there. Okay, and then the rolling order pops up. So let's take a look at it. Well, let's get rid of the chart because we don't need it. Okay, so a rolling order basically means I'm going to buy back this week's 28 March 25, that's this Friday's, and then I'm going to sell the same number of next week for April. That's next week. Okay, so I'm buying this one and then I'm selling that one. And I'm walking away with a 4-cent credit. It's not a lot of money, but it's a $4 stock. So a $4 stock, well, 1% of $4 is 4 cents. So that's right at 1%. So that works. Okay? Now, if I change the dates or the numbers, see, right now it's a 4-cent credit. If I change the number, well, now it's a 1-cent credit. Now it's a 1-cent credit. So you got to keep an eye right here, because that's what's going to tell you whether it is a credit, which means you're getting money, or if it is a debit, which means you've got to pay money. One or the other. So I'm not sure, other than, call, we'll actually take a look at your account and show you exactly what you can do, what you can't do. Now, I can't tell you what to do, but I can give you ideas and explain things to you so that you can make a better decision. And once you find that better decision, well, then you'll be in a better position. All right, let's get out of this. Let's get out of that. Let's go back to trade. Let's go back to there. All right, let's get out of that one. All right, so You buy back one option and you sell another option. Now you can change dates, you can change numbers, you can change a lot of things. But always keep in mind, what do you have to pay or are you receiving something? I don't like paying. I don't. I will roll it forward further and further and further, but I don't want to pay. I'm weird that way. Tree squirrel. Okay. Don't. Ramza Lee Wonhoek. Ramza Lee Wonhoek. What companies are you looking for in regards to the week 1 of quarter 2? I'm looking for the... Oh, here's a good one. You ready? There you go, right there. Week 1 of quarter 1. Whoops. Okay. Week 1, quarter 1 is going to be the exact same as week 1, quarter 2. And that's going to be the exact same of week 1, quarter 3, week 1, quarter 4. Because all these stocks here, all of them, pay a dividend every 90 days. So the first week of the quarter looks the exact same. Quarter 1, January, February, March. Quarter 2, April, May, June. Quarter 3, July, August, September. Quarter 4, October, November, December. Okay? They're all the same. There's only 13 weeks in a quarter. We are currently in week number 13, which means next week, well, it's the beginning of April. It's also the beginning of the second quarter. Could you believe that? The first quarter of the year is already done? A lot of shit has happened. A lot of stuff has happened. All right, so let's get out of that. All right, Joe Dia, how are you? Block Lords, Cool Beans, Dawson's Creek, good evening. Dia, thank you. Clorox Show, we did that one. Tony, check YouTube. Is YouTube YT? No, it's not YT, is it? No, it's not. Melatonin, how are you today? Lisa Michelle, how you doing, Lisa Michelle? Kyle Walker, copy that. Good name. Flipper McGee, what's happening? Jersey, what's happening? New Jersey 78. Okay, Kylie Walker, option liquidity is your friend. Yeah, it is. YouTube is fine. Sorry, thanks, Tony. Ramza, do you still get the premium if the strike price isn't reached? Absolutely. As a matter of fact, Ramza, you collect the premium instantaneously. Here. If I'm going to buy the stock first thing tomorrow morning, 421, and I sell the 450s, I'm going to get that premium that very same day. Now, I'm not going to be able to spend it that day because you got to hold it for at least a day. So, I usually do all my trading on a Monday, which means Tuesday morning I can spend all that money. That's why I like. Flipper McGee, thank you. Jeff Jerzik, what's happening? Uh-oh. Ayo. Ayo, that's wild. Okay, MAR, M-A-R. What the heck is M-A-R? M-A-R. Marriott. Ooh, interesting. Okay, Marriott got weeklies. Nifty. All right, so here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Down, up, down, up, down, up. Okay, what are we doing here? 247.47, so 248 or 247.50. Okay, not this week, but next week? Yeah, most definitely next week. Well, that looks good. Well, let's take a look at the numbers a little bit better. A year ago, we're at 254. Okay, the bottom of the year was in the beginning of August. From there, she shoots up, pulls back. Look at the last 90 days. Okay, so here's the last 90 days, which is the last 3 months. Okay, we're here at like 285. We drop, shoot back up to the high of the year, 308, and drops back down, back up, back down. Now look at this, 2 days to the upside from the bottom right there. Well, I want to zoom in and take a closer look at that. Last 30 days, right there. All right, the 26th, there we go. All right, so the 26th, which is tomorrow. So 30 days ago tomorrow, 285 is the high. She drops, pulls back up again, gaps down, gaps up, and it's 2 days to the upside. Well, here's your high, here's your low. That is a definite invitation. Come on down, take a swim in the pool and see what it's like. All right, so 246.48. I'll be looking at the 247s. Okay, that kind of works for this week, but it's better for next week. I'd probably even do the 245s because the 245s next week, it's a safer trade, number one. And I love safety. Safety, predictability, consistency, profitability. I love all those things. So, bottom, 1, 2 days up. I love it. So, let's take a look. What does Marriott normally do this time of year? Normally, there we go. Now, that's pretty easy to say. Here's where we are. It's going to go up a little bit, about 2 weeks, and then she's going to come back down the second week of April. So we got 2 weeks to play with this thing. And then after that, she's going to shoot back up again. Well, that works for me. Okay? So when you're choosing a stock, besides consistency and profitability, have you ever heard of the company before? And are you okay owning it? Are you okay owning Marriott? And then ask yourself, am I okay owning Marriott at this current price? $247. Okay. Next. Let's do one. Why not? Let's do one on Marriott, $247. Okay, change this. Covered stock. The $247. One contract. Market. Confirm and send. Here's the order. Buy one covered call of Marriott. 100, that's the weekly, for April 25, that's next Friday. The 247.50 call option at the market to open. Okay, well the stock is currently at 247.47. Well, 247.50 is pretty damn close, and we have 10 days for it to get there. What's my profit? 562. Calculator. 562. I'm going to divide that by the cost of the trade, including commission and fees. 24,188. All right. 24,188 comes to a grand total of 2.33%. Okay, I like 2.33%. That works for me. I'm going to write that one down. All right, that one looks pretty good. All right, let's get out of that. Let's get out of that. Let's change that. Jeff, thank you. Blake and Noakes. What do I think about Tesla? Live stream. I like dividend stocks. Well, you come to the right place if you like dividend stocks, but this might be something you're not quite used to because it's not quite something you've seen before. Antoine, good evening. Humongous. What do you think about JP Morgan? Well, we'll take a look at that next, okay? Okay, Blake and Noakes. Black and Noakes? I don't know. Sam, You get asked about Tesla about 5 times a week. Absolutely right. I was going to get there for a second. Hold on a second. So, Black and Oaks. Tesla does not have dividends. So it always amazes me. And don't get me wrong, some people think that, they can slide one by me or I might not notice. But they like something to a point where they don't see other factors. What do I mean by that? Well, you come to a show that is dividend stock talk. Let me repeat it really slow. Dividend stock talk. See the key word? Dividend stock talk. Tesla doesn't have any dividends. So that's a no. Okay, that's a no. Sorry. No dividends, no thank you. Now the reason, Black and Oaks, the reason I want dividend stocks. You see this behind me? Okay, that's a calendar, right? March 25. Well, we're in March 25. The reason I want dividend stocks is because, see the dividends? These little green dots represents the day the stocks pay out a dividend. It's called an EX dividend calendar. So each one of these right here, okay, has over 5 decades. That's 50 years of increased dividends. Now, the reason why I only trade dividend stocks, or I tendency to trade only dividend stocks, is because dividend stocks have a tendency to increase in value before these little green dots. So this one right here, Nordson, Walmart. If I want to get the dividend on Walmart, if I want to trade Walmart, well, I want to know something that most people don't. Well, most people don't know that Walmart has a tendency to go up in price just before this date every 90 days because they're going to pay a dividend, which a lot of people like the dividends, so they buy the stock just before the dividend, and then the stock goes up in value. Knowing that, I now know something to help my trades be more profitable and to be more consistent. So consistency works for me. Consistency, profitability, safety. I love those Lees. Okay, I like Jamie Lee. Anyway, so the reason I like dividend stocks is because they go up in value just before the dividend date. So if I look at the stock just before the dividend date, I know it's going to go up or has a tendency to go up. So if it has a tendency to go up, I'm more likely to be right. All right. Now, as of this date, 3/25 this year, I have 0 losses. Now, I make at least 100 trades a week. 100 trades a week, and there's 13 weeks. So that's about 1,300 trades so far this year with 0 losses. I don't know. I think it's pretty good. So Tesla, as much as I like the idea of Tesla, I don't trade Tesla because it doesn't have dividends. It doesn't give me a good indication of the consistency of going up in value. Okay? So if I don't know when it's going to move, I got to sit in front of the computer and watch the chart. Yeah, I don't want to do that. But if they have an EX dividend date and I want to buy it because 2 weeks before the EX date, the stock has a tendency to go up in value. By knowing that ahead of time, I'm one step ahead of, I'm just one step ahead of my former self. I don't want to pick on anyone else. Okay, so I hope you understand that. The reason I do dividend stocks is because they have a tendency to go up in value before the dividend date. And if they have a tendency to go up in value, why not take advantage of it? Come up with a good, simple, safe trade, okay, that's consistently profitable. How can you go wrong? I mean, if it happens over and over and over again, well, you can set your clock by it. Okay, here's an idea. Stocks move for 2 reasons, and only 2 reasons. Only 2 reasons stocks move. That's it. 2. A known reason or an unknown reason. Now, an unknown reason could be something like a natural disaster. Okay, a flood, hurricane, tornado, tsunami, earthquake, explosion in the factory, death of a salesman, an oil tanker running aground, or what do you call it, an oil pump springing a leak. You don't know it's coming. All of a sudden, headline news, stock drops. You cannot plan for that. That's called an unknown reason. You can't plan for it because it's unknown. It just freaking makes sense. The second reason is what is called a known reason. We know something is about to happen. A stock split, earnings reports, dividends, seasonality. Ooh, there's a good one. Certain stocks move predictably during certain times of the year. I'll give you a couple examples. Weight Watchers, okay, you know that diet one, that Weight Watchers has a tendency to increase in value beginning of January. Duh. Okay. Hershey stock has a tendency to go up in the beginning of February. Okay, you got Easter, you got Valentine's Day, two of the biggest chocolate days of the year. So yeah, Hershey goes up the first 2 weeks of February. Okay, Microsoft has a tendency. Wait. No. Was it Google? Google has a tendency to go down the first quarter. Apple has a tendency. Certain stocks move predictably every year. That's called seasonality. You can actually take a look. Let's go. Where is my seasonality chart? Okay. Here's my seasonality chart. Okay, this one's not huge, but as you can see in the fourth quarter, October, November, December, the fourth quarter, nice upward move. Okay, look at the first quarter. Okay, goes up a little bit, comes back down, and look at the second quarter, the third quarter, nothing. Why? How about Hershey's? HSY. The first couple weeks in February, it shoots up. Okay? You can predict certain stocks moving. It's a known reason. Okay, so we know. Now, also, we have dividends and we have earnings reports. Now, I don't like earnings reports. Let's go here. Okay? These are the dividends in green. The earnings reports are in blue and purple. Okay, those are earnings reports. Now, I don't like earnings reports because I have seen positive earnings and stocks going down. I've seen negative earnings and stocks going up. But the interesting thing about dividends is when the dividend comes, well, stocks usually go up just before the dividend, consistently. So yeah, that's why I don't do Tesla. Doesn't have dividends. I can't predict when it's going to move. Doesn't make any sense to me. Okay? But, what's his name's right over here? Yeah, somebody always asks about Tesla every week. 4 or 5 times a week somebody asks me about Tesla. Okay, Hugh wants to look at JP Morgan. So let's take a look at JP Morgan. JP Morgan. I'm going to say no to JP Morgan. Okay, Hugh. Now, here's the reason why. Now, I like JP Morgan. I should say not this week. Look. Okay, she drops. Now she gets at a 30-day high. I do not want to jump on a pony on a 30-day high. Yeah, went from $225 to $250. That's a $25 increase. Okay, $225 bottom right stock. That's a 10% increase. Okay, I don't want to jump in at 10% increase. I like 2 days of the upside. Here's your bottom, 1 day, 2 day. If the third day here is an update, that's where I want to jump in. Now, I have missed this plenty of times, but I don't want to take the risk. Okay? I'm very happy with my returns. Okay, 1% a week is over 50% per year. I am perfectly happy with the returns I am getting. I have no desire to expand my horizon in this field. Okay, so money in my life is like that much. Okay, so I have my personal life, my family life, my health, my religion, my contribution, so many different aspects of my life. Money is just one tiny aspect of my life, and it's already done and taken care of. I don't need to worry about it anymore. I'm just sharing with you guys, and hopefully, when my grandchildren get older, they will be watching this video diary. Okay, that's what I'm going to call it, a video diary. So every night I do a video, no, almost every night, I do a video for my children and my grandchildren. This is for them. Hi, guys. So maybe 10, 20 years in the future, they'll be watching. All righty. All right. Let's keep on keeping on. J.P. Morgan. You tell what I'm going to do with J.P. Morgan. I'm going to write J.P. Morgan down for 2 weeks because I have a sneaky suspicion because stocks go up and then they come back down again. You have some profit taken, so in about 2 weeks, you probably should pull back, and we'll take a look at it again. Not next week. We'll take a look at J.P. Morgan again in 2 weeks. So for those of you that have been following for a while, you know that I, write stuff down. JPM. So every week, I have a new list. So when this looks good, great. Looks good for last week. So last week, it would have been here. Okay? Last week, okay, here's last Monday. Okay, here's your bottom. 2 weeks ago, Thursday. 2 weeks ago, Friday, it was an update. Monday was an update. Tuesday would have been the day to get in. And look at that ride. Yeah. So that was 2 weeks ago, not this week. Andre, how are you today? Brando. Thank you for that, Brando. Jimmy, do I like Microsoft? Yes, I do like Microsoft. It's a little out of my price range, but I do like it. MSFT. Now, see that? It's $400 a share. I don't do $400 a share stock, but if you have that kind of money, well, let's take a look at it. Because I'm assuming... Wait a second. Hold the phone. Okay, here's the last 30 days. Well, you do have some more space. All right, so we'll take a look. It looked a little fishy at first, so I'm going to go backwards. Here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down, up, down, up, down, 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 down. And now she's going back up again. 395. The 397s. 470 to 480. That's more than 1%. That's what I like, more than 1%. So let's take a gander. A year ago, 423. The high of the year, 468.59, and that was in July, the first week of July. She drops, goes sideways. Look at the trading range. Okay, 405 to 430, right in that area. Look how many times you could have done it. Okay, buy, sell. Buy, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. So I love it when they go sideways or channel. Okay, it stays between here and here. Okay, but anyway, don't want to confuse anyone. So that's the 1 year chart. The last 90 days, same thing. The high, the low, where was it? Look at the movement. Down, up, down, up, down. Now she's going up. It's easy to see. And then let's make a look at the 30-day. Because the 30-day gives me an idea of where do I think it's going next. Okay? Now, the high of the 30-day period is right here at 406. The bottom, 377. Now she's going back up again. So 377, that's $20. Almost a $20 move. Okay, what was that? 7%? 6%? Not a lot. So, yeah, it has some room to move. And remember, I'm only looking to get 1%. So if I buy it at $3.95, okay, the $3.95 is going for $6. Well, that's over 1.5%. 1.5% every single week is over, I think, 80% for the year. Well, that's nice. Can you imagine 80% per year? Now, you do have to do something. It should take you. Now, anytime you hear one of my videos, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. So it shouldn't take you more than 10 minutes. We're going to take a look at 5 stocks, and I'm just going to breeze right through them. I'll show you exactly what I do and how long it actually takes to look at 5 stocks. It's not that long. All right. It's not that difficult. All right. So what's Microsoft usually do this time of year? I don't know about you, but there you go, right there. Right, there we go. I don't know about you, but that definitely going towards the upside. Okay, so here's your questions. Number 1, do you like Microsoft? Do you like Microsoft at this price? And are you, and now the question, are you willing to hold on to it until it hits your target price? Well, my target price is $3.95. Well, what's it at now? $3.95, 34. Well, I lose 34 cents, but I don't really, because look at what I'm bringing in. Okay, well, bringing it right here, $6. So you take 35 cents off of that, we're walking away with $5.65. Well, $5.65 on a $395 stock, well, that is over 1.5%. That works for me. It's a good pick there, Jimmy. So let's keep on keeping on. Mary June. Good evening, good evening, good evening. Where was I? Okay, can we look at Riot, New Jersey? Is Luigi mad? I don't know. Luigi, you mad about that? Yeah, Luigi says, what the hell were you thinking about Tesla? What do I think about JP Morgan? Where did JP Morgan? You get asked that 5 times a week. Yep. I like Ford. Okay. Desire. Okay, Desire live stream. I like Ford. I like Ford too. Okay, Silver, what is that? Do you normally limit your trades to U.S.-based companies, or could this strategy be developed in the TSX, for example? All right, Silver, I have no idea what TSX is. Okay, now, I understand U.S. options. Now, European options, you can only exercise them on the date of expiration. That much I do know. Could it work for those? Yeah. I would have to do a little bit of studying on the European markets or the other markets other than the U.S. markets. Okay, is there consistency? Is there patterns? Because I know Europe has some beautiful companies that have great returns and have great dividends. Okay, and I don't have access, or I don't know where to get the access to those kind of markets at this moment in time. So at this moment, I'm just sticking to the U.S. markets. But if you're interested, I have no problem. If you want to drop me a number, we can chat, and then we can talk about, where to get that detailed information. I own Hershey's. All righty. I do buy and hold, earn the dividend, and continue to invest over the long term. Hey, there's absolutely nothing wrong with that. It's a great straight. Yeah, money's TSX. Oh, that's Toronto, Canada. Cool beans. Thank you, Christian. Thank you. I would have to find out where to get that detailed information, because I'm pretty sure Yahoo Finance should have it, or Google Finance. You want to chat? Send me your number. We'll talk. Okay? Because be 100% honest with you, I have no idea who's listening, so I'm gonna be leery of what I say. Here you 75 Corvette wants to take a look at Mara. At Silver Guy, perfect. We can do that tomorrow. Thank you for touching the subject. Cool beans. All right, Corvette, 75 Corvette. I used to have one. No, I had a 76 Corvette. Mara. M-A-R-A. Now, I do own Samara, just in case you're curious. Oh, take a look at that. High, low, is. Look at the movement. Down, up, down, down. Now she's going up. 1424, the 1450s. Okay, this week, 2%. Next week, 4%. Well, that's nice. Well, let's take a better look. So, Mara, here we go. A year ago, 2177. Down, up, down, up, down, up, down, up. Here's the high right here. 30.33 at the end of November. Okay, last 90 days. Okay, here's your 90-day chart. High, low, where was it? Where is it? Look at the motion. Down, up, down, up, down, up. What's happening today? Now, we talked about this last night. Okay, now I don't remember how many of you remember this last night. Okay, 30 days ago, here we are. Shoots up, pulls back, shoots up. Look at this, gap up and that big movement. Now, for those of you who are new here or haven't been here before, you can go to YouTube. No, you can't because we didn't record last night. Damn it, I had an issue, technical issue last night. But we talked about this last night, a gap up and that big movement. We thought it was going to pull back today. It did. Okay, profit taken. Okay, how many days of profit taking are there going to be before this turns around and goes back up again? Okay, because that's what stocks do. They go up, they go down. Okay, this one's on its way down, then it's going to turn around and go back up. Mary June, can we look at Kohl's, please? Kohl's. Here we are at Kohl's. Ooh, another pullback after a big jump. Okay, a year ago, here's the high, here's the low, here's where it was, here's where... This is an easy one. Look at this. Down, up. So it hit the bottom of the year a couple of days ago. Okay, right there. I want to get a good look at that one. And yes, I do own some Kohl's. I think I have it at 16 or 22, something like that. All right, so it's at 9.16. The 9s are going for 26, but if I buy it at 9.16, I'm losing 16 cents if I sell it at 9. So you take 16 off of this, I'm walking away with 10 cents. Yeah, that's over 1%. But let's take a look at the 950s. The 950s, walking away between 8 and 9, so that's about 1% also. I would go with the 9 because it's a safer trade. I like safety. Safety is a good thing. All right, so let's take a look at the chart. The high of the year was about a year ago, 29.71. All right, 29.71. So she drops the last 90 days. Here you go. The high, the low. Where was it? Where is it? Look at the motion. Up, down, big drop, and then up again. Okay, fine. Last 30 days. Now, we talked about this yesterday also. Okay. A big jump like that on this kind of a stock sometimes pulls back. Okay. 30-day high, 30-day bottom. Now she's going up. It is a clear upward trend. Okay. Do you like it? Well, I own some. I have no intention on selling mine. Okay, I just keep it and keep rolling it forward, keep paying out 1% every single week. My theory is, if a stock is going to give me 1 or 2% every single week, why would I get rid of it? Juan Luna, ¿qué pasa, amigo? ¿Cómo está? What do you think about SPY and QQQ? I hate doing this to somebody new, because Juan, you're relatively new here. Okay, I don't remember seeing you here before, Juan Luna. My friend James doing great. All righty, Jeff. Okay, so Juan, you want to take a look at SPY and QQQ. You're not going to like it. All right. I'm not going to show you this. I'm going to show you something else, and I'm going to explain to you why I don't like SPY and why I don't like QQQ. Now, when I say I'm looking for a 1% every single week, simple, safe, predictable, and consistent, 1% a week. Okay, consistency of profitability is one of my main goals. All right, so let's do this. SPY. All right. You ready, Juan? SPY. First and foremost, it's $575 a stock. A little on the pricey side. Okay? Now, Juan, I'm not 100% sure how familiar you are with investing. But when you invest something, when you put money somewhere, you're looking to get a return for your money, because you want it to give you, more little monies. I don't know how you want to say it. You want your money to increase, okay? So you invest your money. Here, you're investing $576 per share, okay? Look at the return you're getting for SPY, okay? The yield. That's your rate of return. 1.19. 1.19. Now, I'm showing you how to get 1% every week, but you're asking me about SPY that pays 1% every year. And look at the rate of return this year on SPY. Negative 1.75. So the money you made last year, you just lost it. I'm looking for 1% a week. That's 50% per year or more. Now, QQQ ain't any better. So let's go to the Qs. Oh, it's actually even worse. The yield on the Qs, 0.56. That's a little bit over 0.5% per year. Okay, now do you understand what 0.5% per year is? They have something what's called the Rule of 72. Right? The Rule of 72 gives you an idea how long is it going to take to double your money. Okay, at 0.5%, you're going to look at 140 years. 140 years, about. It's a long time at 0.5% per year. Yeah. Now look at the year-to-date total return, negative 3.88. So if you're getting 0.5% a year, and this year is negative 3.88, that is 7 years worth of returns down the tubes at 0.5% a year. So, okay, one, I don't do spiders and I don't do the Qs. Sorry. JK, what's happening? Chucky B, what's going on? Matt Redmond, thank you. Woo Login, how are you today? Tesla is a growth stock. Figured it would be sliding right now due to social media attitude. Okay. I get it. I still don't do it, but okay. Uh-oh, Boogeyman is back. He was here a while ago. Knowing people do that. Wait a minute. Knowing people do that, how does Walmart make money? Knowing people do that, how does Walmart make money? That makes no sense, but okay. How does Walmart make money? Buys cheap products and sells it to you in quantity. Matt, good evening. Gabriel, how you doing? Matt Redmond, thank you for that, Matt. Alrighty. Udem Komar. Udem Komar, good evening. Dirt Farmer, back again. Alright, thanks there, Dirt Farmer. Joshua, what about Altria? Oh boy. Yeah, I'm short on Altria. It does not make me a happy camper. Lord's Favor Graphics. Cool beans. Altria. Let's take a look at Altria. Oh, nice. She's dropping. Okay, so Altria. The high, the low. Where was it? Where is it? Look at the movement. Down, up, down, up, down, up, down, up, down. It's coming down at the moment. So, Not this week. Don't get me wrong, I like Altria. It is on my list, but not for this week, it ain't. Ramza, is it possible to get access to your dividend calendar? Sure. Daisy, good evening. Mr. Blast, how are you today? Matthew Williams, Realtor, how are you doing today? Thank you for that, Matthew. A-Rod, what's happening? What about a tariff? Okay, what about a tariff? I'm not quite sure what your question is there. Okay, now, Filoto, can you expand on that question? Because I'd like to know a little bit more what your question is. Hey Rod, hey y'all. Okay, Ramza, should we not place a covered calls before tariffs come on April 2nd? Ramza, let me. I'm not quite sure how to answer that. Other than this, are you ready? Most of the companies that I'm looking at are over 100 years old. 100 years old. Ford, over 100. Coca-Cola, over 100. Pepsi, over 100. General Electric, over 100. Consolidated Edison, over 200. Okay, General Mills, Procter & Gamble, a whole bunch more. Some of the companies I'm looking at are over 50 years old. Okay, so these companies have consistently increased their dividends regardless of what's going on in the economy. Now, let me explain a few things that happened in the economy over the last 100 years. World War I, World War II, Korea, Vietnam, Afghanistan, Iraq, Iran, the Gulf Wars, the Desert Storm, all that kind of crap. And then we had the Great Depression. And, ready for this? The stock market crashes. At 1929, 87, 2000, 2008, 2021. There's a bunch of other ones anywhere. But a lot of crap has gone on. So when you're investing for long term. Now here I buy stocks that I like to hold for the long term. Okay, every single stock on my list, I have no problem holding it long term and selling a covered call every single week. If it happens to hit my target, fine. I'll jump out and jump into another one. Stocks go up, stocks go down. Are stocks going to go down during the tariffs? Yep. Are stocks going to go up during the tariffs? Yep. You could look at almost every single day in the stock market. Stocks go up, stocks go down. Even in 2008, some stocks went up, most of them went down. In 2021, during the pandemic, some stocks went up, most of them went down. It all happens. DATS made 50% today. A-Rod, cool beans. Andrea! Hey, James, which stocks were you reviewing that dropped 50%? Well, that was a bunch of them. Okay, so which ones were we looking at earlier? Macy's. Okay, no, Macy's did drop 50%. 21 to 10, and that wasn't it. Walgreens, WBA. WBA. Walgreens. 22 to 11. That's 50%. What else? What else was there tonight we looked at that dropped 50%? There was a few of them. DATS. Okay, A-Rod. I made 10% of my bankroll. Okay. Matthew Williams, Realtor. What do you think of predictive oncology? Okay, Matthew Williams, Realtor. You got to give me the ticker symbol because I've never heard of that company. Okay, now I've been trading for 20 years. I'm pretty good at stocks that consistently increase their profitability. Now, some stocks don't really work out very well for me, but I like consistency of profitability. I've never heard of that one. So if you give me the ticker symbol, I'll take a look at it. UNP. Lord's favor. I want to trade, but no funds. Can you help? Oh, you're Nigerian. Cool beans. UNP. What is UNP? UNP. Union Pacific. Ooh. Okay. Union Pacific looks like it's all over the place. Look at it. Up, down. Okay, a year ago. Here we are. Okay. The high, the low. Where was it? Where is it? Look at this. Down, up, down, up, down. Now she's coming down at the moment. Let's take a good look because I can't really see right there because there's a lot of activity there. But the number 235, 236, 235, 210 this week, 235 next week, 325, losing a buck, 3, 2. Okay, interesting. For next week, not this week. All right, so let's take a look at the numbers. A year ago, Union Pacific is at 244. The bottom of the year was the second week of June, and that was 218.24. The high of the year was the beginning of September, 257. I got to sit down. My knees are starting to bother me. That's weird. Doesn't usually happen that way, but okay. Oh yeah, let's get comfortable. All righty. Comfortable. That's the high of the year. The last 90 days. Here we go. Last 90 days. Okay. The high, the low. Where was it? Where is it? Look at the movement. Down, up, down, up, down, up, down. See, when I'm looking at the 90-day chart, I'm looking for, predictable movements. What does it normally do? Okay. Is there a pattern? Okay. Down, up, down, up. Yeah, it looks like there's a nice little pattern there. But it's bouncing off this bottom right here, going to the upside. So the last 30 days, here we go. Now the last 30 days looks pretty good. Okay, 30 days ago we're at 246, the high at 251. Here's the bottom right here, 231. Well, that's a big drop. Yesterday was higher high, higher low. Today, a higher low, not a higher high, but still going a little bit to the upside. Alrighty. What does it normally do? Normally, this time of year, right there's where we are. Well, you can't really disguise that thing. Jumps up, sideways, and then pulls back. So 1 week, 2 weeks. So we got about 2 weeks to play with this before it drops. Now, the seasonality only gives us an idea of what did it do over the last 10 years. What did it normally do? What does it normally do? Up, down. Okay, so at the 235 or 236s, yeah, we can make 1% off of it. But then it comes down to that question, do I like Union Pacific? You either like it or you don't like it. It's one or the other. Ooh, getting old sucks. Standing here, my knees are starting to hurt. All right, so that's Union Pacific. To take a look at Intel. So when you sell a covered call, you still have the stock. Exactly. Call is more or less you're giving someone the opportunity to buy it from you, first person in line to buy it from you. So if I buy this one at $235.79, the current price, and Ted down the street wants to buy it from me, and then Bob on the other corner wants to buy it from me, well, the first person to come up with some money for me to hold it for them. It's kind of like, here's an idea. Let's say, hypothetically speaking, you have an old car in the backyard, you push it out to the front, you slap a for sale sign on the car. Okay, let's say you want $5,000, old beat up car. And then Tom down the street says, hey, I like your car. take this money, hold the car for me until Friday. If I come back, I will give you full price for it. But the money is yours to hold it for me, so I'm the first person. You cannot sell it to anyone else but me. If I don't come back on Friday, you keep the money and you have the right to sell it to somebody else next week. It's basically the same thing. Okay, if I own a car and I want to sell it, I can sell it to anybody I want at any time I want. But as soon as I take a deposit, a non-refundable deposit, think of it that way, a non-refundable deposit, okay? If the guy comes back on Friday, he gives you the full price of the car. Okay, if he doesn't come back, you keep that non-refundable deposit and then you sell it to somebody else the next week. And you do the same thing. So let's say Tim, 3 streets over, says, hey, I like the car. Hold it for me until Friday. Here's some money. Hold it for me until Friday. If he comes back on Friday, gives you full price. If he doesn't show up, you keep that money also. And then the following Monday, you sell it to someone else. You have to wait until the option expires. Okay, so if I sell somebody the rights today for this week, see the date? 28 March. That's for this week. 4 April. That's next week. 11 April. That's 2 weeks away. 17 April. That's 3 weeks away. So every single week, that's why they call them weeklies. They expire every week. So if you own a stock, okay, looking at UNP at the moment, Union Pacific, I can buy it first thing tomorrow morning at 236.55. Then I can turn around as soon as I buy it. Okay, it's mine. Now I can sell it to somebody else instantaneously. As soon as I own it, I sell it to somebody else for the strike price. And I collect this as a premium. Think of it this way. Uh-oh, lost my thought. Damn it. Oh well, lost my thought. 239 Leon. How are you this evening? You want to take a look at Coney? I don't like Coney. Coney's not even a year old yet. Let's throw Coney up there. CONY. Okay? Now, I don't do Coney, Leon, because it is a monthly option song. See that? 17 April, 16 May, 18 July. That's months. That's a monthly optionable stock. It doesn't work in this example. Okay, I want weekly cash flow. The only way I'm going to get weekly cash flow is by an option that is weekly, not monthly. Dan Craig Cabinetry. Good evening. Mark the Realtor. What's up with Dow? Ooh, Dow. Let's take a look at Dow. Mark. D-O-W. Ouch. Okay, Mark, we're not going to do anything with Dow. Look at that. Okay, 1, 2, 3, 4, 5, 6. 6 down days in a row. Now, the nice thing about that, believe it or not, it is something nice, is that as soon as it finds its bottom, okay, see here, bottom, turns around, goes up, bottom, turns around, goes up, okay? As soon as it finds the bottom, turns around, goes back up, that's where I want to jump in. I like Dow. It is on my list, and I'm going to write it down for next week. We'll keep our eye on it. Okay, yeah, I write stuff down. Because the memory ain't what it used to be. Best monthly dividend stock in Canada. Man Beer, sing. Sorry, can't help you out with that, dude. I don't do Canadian stocks yet. Okay, Kasoon Denara. How are you doing this evening? Gallant, dude, I haven't heard from you in a couple of days. You show up, you disappear. You show up, you disappear. How you doing? American Airlines, huh? American Airlines. Uh-oh, uh-oh. Get my foot off the table. All right. Interesting. Look at that little jump right there. High, low, where was it? Where is it? Okay, down, up, nice. 1151. Interesting. All right, so at 1151, the 1150s for this week's 20 cents. Well, that's a nice little premium, right? Okay, the 1150s this week. There's only 3 days left. So you can get 1% right here. Next week's 1150s is 3%. Well, that's nice. All right, so let's take a gander. Let's take a gander. My shoe keeps falling off. A year ago, 1476. The bottom of the year was in the beginning of August, and that was 907. She shoots up to 19 towards the end of January. There's the last 90 days. Okay? Last 90 days. The high up there at 19. Here's the low. That's where it was, way over there. Here's where it is. Up, down, up. Easy enough to see. It's easy enough to read that one. Last 30 days. Well, you can't really mix this one either. 30 days ago, 1550. The high, right up there. And then she drops down to here, 10. Now, from 15 to 10 is a 33% drop. That's a big drop, 33%. In 2 weeks. 2 weeks. 30 days ago, 2 weeks ago. Okay, but from here, 10 to 12, now, she drops 30%. And then from here to here, she increases 20%. And there was pullback today. Well, of course it's going to be pulled back on a 20% increase. And it doesn't look that big, does it? 1550 to 1050, that's a 33% drop. But 1050 to 12, a little over 12, okay, that's a $2 increase. Well, $1.50 increase, yeah, it's about 10 to 20%, 15 to 20%. Anyway, let's keep on going. What does American Airlines normally do this time of year? Well, it's easy to see that. She's going to jump up. No, only 1 week. Yeah, that's only 1 week, and then she's going to drop. Yeah, the numbers don't really look that great. The seasonality doesn't look that great. Okay, here's your 20%. Now she's coming down today. I'd be kind of curious what's going to happen tomorrow. Okay, because from here to here, that is a 15 to 20% increase. Not much. No, I mean, a week and a half. But that's quite a bit. And then it was profit taken. Okay. Sean, thank you for that. Oh. All right, I already seen that one. I really can't do this sitting down. All right. Sean, thoughts. Pablo's man, how are you? What about Verizon? Okay, Verizon. Let's take a look at Verizon. All right, VZ. Here we go. Interesting. Okay. The high, the low, where was it? Where is it? Look at this. Down, up, down, up, down. 43.88. The 44s, no, thank you. 44s, no, thank you. Sorry, numbers don't look good for Verizon. James, do you use a screener to identify new stocks? Mark the Realtor, of course I do. You ready? It's simple. Really, really, really easy. Are you ready? Dividend Kings List 2025. Dividend Aristocrats List 2025. Dividend Champions List 2025. Let's put the glasses on for a second and show you exactly where you find them. You ready? Here we go. I need a haircut. Yep, tomorrow I'll get a haircut. All right, so we're going to go over here. We're going to open up us. Right, GameStop to invest corporate cash in Bitcoin. Wait a minute. I don't care. Google. Okay, Google. There we go. You ready? See that right there? Dividend Kings list 2025. Oh, Dividend Aristocrats list. Then you can put the 2025 there. Oh, pop up. So you click on this right there. Oh, look at that right there. All the Dividend Kings. I click on that. Yep, there it is. Oh, look at that. What do we have here? All right, you ready? Check this out. This is cool. Emerson Electric, 69. 69 years of increased dividends. Cool. Dover, 68 years. Parker Hannifin, 68 years. Nordson, 61 years. MSA Safety, 58 years. ABM Industries, 56 years. Procter & Gamble, 68 years. Coca-Cola, 62 years. American Water, 70. 70 years. Holy shit. Consumer Discretionary, Genuine Parts Corporation, 68 years. Financial, Cincinnati Financial, 64 years. Healthcare, Johnson & Johnson, 62 years. Materials, Stepan, 57 years. Real Estate, Federal Realty Trust, 56 years. You can go right to Google and look it up. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. Those are the stocks that I like. Consistency of profitability. There's no way you can get on this list here unless you increase your dividends every single year for a minimum. Well, I got to go up here because people over here can't see me. For a minimum of 5 decades. That's 50 years. That's a lot of time. All right, so anyway. So that's my scanner mark. Patty, how are you today? Caleb, what's going on? Beardo Dad, welcome back again. Patty Hasty. I wonder if that's the same Patty Hasty I went to school with. Could be. You never know. Matt Redmond, drop your number. No. Matt, you got to drop your number. I'll give you a call. Okay. How do I claim Social Security? You go to the Social Security office and say, hey, I want Social Security. Jersey, say whatever you want. It's your show. Thanks, Jersey. Okay, Jersey, we already looked at Mara. What stock is this one? No, this is a Dividend Kings list. It's not any stock in particular. That one right there is Verizon. Thank you. You're welcome. Me Lidso. Okay. Ravenly Studios. Can you move the camera over? Yeah, there I did. I moved the camera. This is Riot. Okay, it was Riot. Lindarella, good evening. Tam, good evening. How come Macy's isn't really paying 1% for calls anymore? Macy's isn't paying 1%? Hold on. Okay, Macy's is at $13.58. Okay, so the 1350, 25, the 14s, okay, not this week, next week the 14s going from 11 to 25. That's a good question. Those premiums really don't look that desirable at the moment. But I can't answer that question because that's a question you have to answer from the market maker. He's the one who makes the numbers. Monopoly, good evening. Billions, how are you doing? Back again. Opinion on Johnson & Johnson. Okay. J&J. Okay. Okay, so here's the 1-year chart for Johnson & Johnson. The high of the year just recently. Okay, here's the low. There's where it was. Here's where it is. Look at the movement. Down, up, down, up, down. It's coming down at the moment, so it's not going to be one we want to take a look at this week because it is on the way down. So on the way down, it doesn't really work for me. Billions, tell us what you recommend. I recommend education. Gallants, I see you are still using the Dark Reader extension I told you about. Thank you, sir. It is working lovely. Zappity Zap. You're talking about dividends and distributions last year, and now you're talking about last year. Zappity Zap, I'm not quite sure what you're meaning, because this is this year. Okay, this is actually today. These numbers are today, so I'm not quite sure what you're talking about. But okay, I don't judge. UNP selling rights. Okay, so you're selling the right to buy at a certain time. I got it. Okay, Sam, you got it? Futuristic Gal, how are you doing today? Do you do the wheel strategy? Sometimes. Free speech and other stuff. No options on WBA. Bummer. Yeah, because I got a contract pending on buying it out. That's why we're not trading WBA anymore, because interesting things going on. Jamar wants to take a look at FedEx. FDX. Okay, so anyway, Johnson & Johnson. Okay, there's the high. Now it's coming down. We're waiting to find a new bottom, so we're just going to have to wait on Johnson & Johnson. Jamar, FedEx, FDX. FDX. Well, now we jumped into FDX after this big drop right here. Now it dropped again right there, and then it retraced. All right, so let's take a look at FDX. A year ago, 281. Okay, we dropped, retraced. 30. The high of the year was in the middle of July, 314.09. Dropped again, retraced. Last 90 days, right there. Okay. 90-day high. 90-day bottom. Now she's shooting back up, right back in this area again after this big drop here. Now we talked about this the other last week. That big drop, yeah, it's going to be a retracement, and it did. Last 30 days, here we go. The high, the low, where it was, where it is. Look at this, up, down, up, down. Now she's going back up again. Where's it going? Don't really know. We have 2 days to the upside. We got a higher high and a higher low today, but she closed lower today than she did yesterday. What does that mean? Not a whole heck of a lot of anything other than no clear pattern for tomorrow yet. So we'll take a look at it again tomorrow. It might make more sense tomorrow than it does today. Billions, tell us recommendations. Well, my recommendation is paper trade first before we put real money in it. Read some books, give you some explanation on what's going on. Do a little bit of reading on terminology when it comes to trading. What about the plus 30 it did last year? Zappity zap. All right, zappity zap, you're saying stuff. I'm not talking about dividend and distribution last year. And now you're talking about last year. Okay, that's not a question, that's a statement. Okay, I'm not quite sure what you mean by that, but okay. And then what are you talking about? Could be talking about Spider and the Qs. Not sure. Could be, because that was a while ago. All right, Dark Extension. What's the Dark Reader extension? Yeah, well, Yahoo Finance was really bright. And they had an extension would have made it dark so it's easier to read. Hollywood's in the house. What's happening, LA Sound Wave? Hey, Austin showed up. Antonio Martinez. Music Spot, 911. I have no idea what 911 means. Talk about RGTI, quantum computers. Alicia, RGTI is not 20 years old yet. So you cannot get 20 years of increased profitability with a company that's not 20 years old. Oh, and it doesn't pay dividends. Okay. Shop All Things. Good evening. Good evening. Kyle Walker, thanks for sharing, my friend. You're welcome. Lion King, how you doing? The Best Husband. Oh, cool. Tesla 2600. Okay, good for you. James, what sector do you like right now? I don't do anything with sectors, James. All my trading is done by the calendar. Isn't that weird? Okay, so let's take a look for a second. Let's get rid of earnings. I don't need to see earnings. Okay. I don't want to look at that one. Okay. James. Okay. MCD. That's McDonald's. That's fast food. O, real estate. Sherwin-Williams, paint. Okay? All three of these, I have no problem whatsoever. Wait a minute. No. I don't like O Realty. So I wouldn't do that one. But Kimberly-Clark, Pepsi, Genuine Parts, all different companies in different industries. I don't break my trading into sectors. I honestly really could care less. I have two criteria and only two. One, consistency of profitability. Is the company consistently profitable? Two, weekly options. That's it, just two. 20 years profitability and weekly options. That's what I'm looking for. That's it. Okay, this night, you know what? We haven't done this in a while, so let's do it right now. I'm going to go on over to FinViz. FinViz. The screener. Now, what I'm looking for here specifically, check this out. Let's get rid of this. Get rid of that. This right here. Okay, right there. See it? 9,979 different companies I can enjoy at any time. Woo! Wait a second. Walmart car insurance. $19 a month. Oh, I'm going to take a look at that one. Get a quote. I'll take a look at that one later. All right. There we go. Okay, so 9,979 different companies available to invest in. Two criteria: consistency of profitability and weekly options. I have no desire to look at anything else. I'm pretty much stuck in my own little pattern. Well, you know what they say. Well, I know what they say, at least where I grew up. If it works, leave it alone. That's it. If it works, leave it alone. So I've been doing the same strategy for the past 15 years because it works for me. Okay, I'm not telling anyone what to do. And I definitely don't do sectors. It was Marvel that dropped 50%. Okay, Andrea, thank you for that. Kyle Walker, how's it going? Matthew William Realtor, POIAI, Predictive Oncology Breakthrough Cancer. Okay, something tells me that this thing is not going to fit. All right, what was it again? POAI. POAI. All right, I'm just going to ignore that one. I can't even believe you asked me. Okay, Matthew, you've been here for a while. Okay? All right, now when I say I'm looking for two things and only two things. One is consistency of profitability. 20 years, 2 decades. Okay, that company could no way possible have 20 years of increased profitability. And two, it doesn't have weekly options. Mary Kay Smith, how are you today? Chin, good evening. Chickapick, what's happening? Chico Pick, okay, whatever. Thank you for that, Mary Kay. Sir, do you do FX or stocks? I only do dividend stocks. Okay, Black Clover DXD. Cool beans. Hollywood wants to take a look at the gap. GAP. Ooh. Hollywood, check that out. I like that. High, low, where was it? Where is it? Look at this. Down, up, down, up, down. Now she's going up again. 2156. The 2150s, not this week. Next week, 63. Yeah. Let's actually do an example on this one if everything looks okay. All right, a year ago, 2793. The high of the year, 3075, and that was the beginning of June. Well, look at the last 90 days. Now, the last 90 days is the last 3 months, right? 3 months ago. Okay? The high, the low, where was it? Where is it? Look at the motion. Down, up, down, up, down, up. Okay, well, let's take a look at the last 30 days. Because the last 30 days gives me a good idea of where it might go next. Right there. Here we go. Okay, 30 days ago, 2350. The bottom, 18. Okay, back up, back down. Now we got 1, 2, 3, 4, 5 days to the upside. Look at all the space we have. We do have some space, not a huge amount, but there's almost the same amount between here and the bottom and here and the top. So it's one of those, do I like it? All right, what does it normally do? Normally, this time of year, the gap looks a little choppy. Up, down, up, down, up, down. Yeah, it looks a little choppy. But do you like the gap? Is it going in the right direction? Does it make sense to you? We're all different here. We all have different parameters of what we're looking for. Okay, you cannot deny that it is going to the upside. Okay, here's the high. It came down. Now it's going back up. How far up is it going to go? We don't really know. So find a trade that actually makes sense. Black Clover DVX. What's dividend stocks? Sir, you do live every day? Yep. Jamar, BBY, please. Okay, BBY. Okay, a dividend stock is a company that shares its profits. Okay, so if a company's profitable, they're either going to take all the profits and share it with the investors, that's us, or take all the profits and put it back into the company for future growth. Okay, so you got to make a choice. Do you want cash flow or do you want capital appreciation? It's kind of hard to get both. You can, but it's not going to be as good if you choose one or the other. So you can either choose one or the other or both. Okay, so it is what it is. All right, Hollywood, let's do this one, see what it looks like. The gap at 2150. Let's get rid of this. Let's change this. Covered call right there at 2150 for next week. Right there. And here's what it sounds like. By one covered call of the gap, GAP 100, that's the weeklies. For April, gets the gap at the market to open. The profit is $59.50, and it's going to cost me $2,091. All right, so let's take out the calculator. All righty, clear that. 59.50, 59.50 divided by 2,091, and it gives me a grand total of 2.8%. Ooh, that looks pretty good. I'll write that one down, the gap, 2.8%. I like 2.8%. Hayes, what to do if stock keeps dropping. How you sell covered calls. Okay, so here's the thing. Stocks do go up, stocks do go down. Now, if a stock drops, I will sell covered calls against it even lower than what I paid for it, but not too close. I'm going to show you for a second. Hold on. Let me get rid of all this stuff. All right. So if I buy the stock at the current price, $22.35, at the money is right here. See the difference between the purple and the black? Okay, purple is in the money, black is out of the money, but where they meet right there is called at the money. That's where all the action is. That's where the most rate of return is going to be. Your highest rate of return is going to be right there at the money. Okay, so the further out of the money you go, which means if the stock drops, that means you're going further out of the money. The premiums you're going to collect are less and less. But here's the thing. Some money is better than no money. And then remember this. Most people buy stocks to hold for decades. So if you're going to buy a stock and hold it for decades, well, you want it to keep increasing in value. Well, what happens if it goes down? It doesn't really matter. Because if you buy it here at $23.50, you're going to get the exact same dividend or your portion of the profits as you would get if you bought it all the way down here at the bottom. So it doesn't really matter where you buy the stock, high or low or somewhere in between. The dividend you collect is going to be the same. Now that is the normal way of investing. Well, here I do things a little bit differently. Okay, if I buy the stock, I want to sell the opportunity for someone to buy it from me for the exact same price I just paid for it. Well, that will give me a nice 1% every week. But as the stock drops, I'm still collecting the dividend, but the premium may not be 1% if the stock drops. That's why I'm looking for a turn. Okay, a 30-day high, it comes down, finds the bottom, turns around, goes up. That's where I want to jump in because I like to have the odds and probabilities in my favor. Is it guaranteed? No. There's only 3 guarantees in life. Okay? Death, taxes, and disappointment. Okay? So this odds and probabilities is what I'm looking for. And I'm going to do the best I possibly can to have all the odds and all the probabilities in my favor. Okay, so as they go down, yeah, I will continually sell covered calls against them, but further out of the money. And yeah, I'll get a less return, but it's a safer return and I won't lose anything. All right? Sir, teach me your strategy. Black Clover, how are you today? I'm here. Just keep showing up and you will learn. Are you live trading now? No, the market is closed at the moment. It's 11:17 p.m. All right, we got 15 minutes to go. And we're not going to look at any more stocks. We're just going to answer questions. That's it. No more stocks, just questions. Now, I said I will answer each and every individual question. So from here to the end of the night, I'm just going to answer questions. Do you know about the famous adventure movie, Two Girls in a Cup? Nope. Never heard of it. Okay, Hayes. Shack Kid. UNH, University of New Hampshire. We can take a look at it tomorrow if you want. Thoughts, Rebel with a Cause. Okay. Thoughts on Tesla. El Tino. We already talked about Tesla earlier. Wizard's Chest. What's up, my boy? You got trades cooking on Mara or what? Yes, I do. William says no. Oh, Neo. Okay. Okay, William, show up tomorrow. I'll take a look at it tomorrow. How did you start your trading journey? I started my trading journey in the 1990s. like 30 some odd years ago. Holy shit, I'm getting old. Thank you for making me feel older. Hayes, you do mostly sell puts and covered calls unless stocks? No, I mainly do covered calls. Very rarely will I do a put. Geo, good evening. Eltino, can you look at Tesla, please, sir? Have a position currently up 3,000. There it is. There's Tesla. What do I think about YieldMax? YieldMax has not been around 20 years. It's going to be a no. Okay, Rocket Lab has not been around 20 years. Okay, Hollywood, we just looked at the gap a couple of minutes ago. Hollywood, William McKinney says hello. Hey, William McKinney, how you doing today? Jokester, that was wild. Okay, what do you think about MLGO? Okay, JT, good evening. Thank you for showing up. Thank you for your input, JT. If you want to show up tomorrow, we'll take a look at it. I got about 51 questions to answer in 10 minutes. So let's see how I can do it. Did you do MBA in finance and learn trading through experience? I learned trading through experience. Okay? You know, you make a lot of stupid mistakes. You do a lot of dumb stuff. And you say, all right, that didn't work. So once you find out something that works and works consistently, well, you stick with it. So the trading strategy I came up with for my 9-year-old daughter back in 2008, she said, Daddy, what are you doing? Can you teach me? All right, so simple, safe, predictable, consistent, no way for her to lose. That's where the trading strategy came from. Simple, safe, predictable, consistent, 1% per week is what I'm looking for. That's over 50% per year. And if 50% per year is not good enough for you, I can't help you out. Okay? Norberto Sons. We take a look at it tomorrow, Norberto. Andrew Osario. How are you doing today, Osorio? Okay, Norberto BKE. We'll have to take a look at tomorrow. Mr. Dividend King. Thank you for that. What about MLGO? JT, we can take a look at it tomorrow. Thank you there, sir. Let's keep on going. What major risk losing money with your approach? Denbon, can you say that one more time, but a little clearer, because it's not making 100% sense. What major risks losing money with your approach? Most people lose money with my approach by hitting the wrong button or not understanding the concept. L. Blueberry, good evening, sir. Mr. Wales, what's your Discord? My Discord is a paid Discord. It's not free. Sorry. Can you check sums, please? We can check it tomorrow. Yeah, I got that one, Norberto. We looked at it before. T-Dog, what's happening? Dude, I haven't seen you in a month. Well, that's because you haven't been here. I'm here every night. Jeffrey, I'm not quite sure what that means, but all right. Tejada Realty, Coney. Yeah, Coney's not even close to being in the realm. Okay, now Coney's interesting for those that like to ride by the seat of their pants. Okay, that's not something I want to do. It's a younger man's risk game. Yeah, not for me. Coney's not for me. All righty. Jersey, thank you. Jeff Farley. What about Alley? Alley Bank, ANLY, Alley Bank, whatever it is. That's on my list, but we'll look at it tomorrow. You haven't answered my question about Intel. Oh, we'll have to take a look at Intel tomorrow. Now, I do have Intel. I thought we did look at Intel tonight. I thought it was one of the first stocks we looked at. Jersey, I know you only like stocks that pay dividends, but you should look at HIMS, pays well. Okay, see, HIMS has not been around 20 years. Okay, I'm looking for consistency of profitability. Okay, there's 9,979 different companies. HIMS just doesn't fit. JT, what do you think of Stellantis for dividends? We can look at Stellantis tomorrow if you want, but we got 6 minutes left to go through another 30, 40 questions. HV5550, HIMS. Okay. Mia, good evening. You think you can talk about HIMS? Yeah, not tonight. Okay, I'm here at 9 until 11:30, and I answer each and every individual question. So if I continue answering the questions, I'll finish up right around 11:30. So if you want to take a look at HIMS, I'm going to be back here again tomorrow night. Black Clover, thank you for that. HV, okay. Ravenly Studios, you're just a bit behind, so the comments that are confusing were posted a while ago. Yeah, Ravenly, I know that, but there's no possible way I can answer each and every individual question as they pop up and show you the stocks. Okay, it's because I've been doing this for about a year. Not the trading. I've been trading for over 30 years. Okay, it is the sharing the information and answering the questions for about a year. So trying to get it just right so I can answer the questions as they pop up and keep showing you. Pandit G Bhavatosh. Okay, I'm not quite sure what language the high part's good. Are you a crypto trader? No, I am not. I wish you would touch on the wheel strategy. Is it the way to do covered calls? Okay, futuristic gal. All right. The wheel strategy is actually two different strategies in one. So we do a cash secured put and then a covered call. Okay, they both work out great, but they both do the exact same thing in a manner of speaking. Because a cash secured put, you need a big fat chunk of change to secure the put. Same thing with the stocks. A covered call, you need a big chunk of change to secure the stocks to get a return up. So both of them kind of the same. Kind of. I'm Fresha. Fresha, how are you doing? Haven't seen you in a while. What do I think about Stellantis? Okay, JT, you already asked me about Stellantis, and I told you we'll take a look at it tomorrow. Did you look at Gap yet? Hey, Hollywood, we already looked at the Gap. Pedro, que pasa amigo? Target, TGT, we can look at it tomorrow. If you can break your line of thought, please, why does the company need to be profitable for 20 years? Oh, well, here's an that's a valid question. If you're selling a covered call and need it to miss the strike. Okay, it doesn't have to have 20 years of profitability. It's just a preference. Okay, if there's 9,979 companies, that's a lot of companies to look at. Okay, 9,979. Yeah, okay, my money, my rules. I don't want to jump into a company that's 2 or 3 years profitable. Most companies don't make it past 5 years. Okay, and 5 years of profits really doesn't give me a good feeling. 20 years makes me feel great. Now remember, you can choose whatever you want to do. If you want to do 10 years of profits, you want to do 5 years of profits, there's nothing stopping you from doing that. Okay, I'm just showing you what I'm doing. I'm not telling you what to do. I'm just telling you what I'm doing. Now, for me to like a stock, it's got to have 20 years of profitability. Because if you're profitable for 20 years, more than likely year 21, you're going to be profitable again. And then year 22, more than likely you'll be profitable again. Now, we looked at, no, not that, this one right here. Where did that list go? Damn it. That ain't it. We saw the list of dividend stocks. There's a lot of dividend kings. There's a lot of companies that are consistently profitable. Okay, so they don't have to have 20 years. That's just what I prefer. If I'm going to put my money into a company, well, I want to make sure that they are consistently profitable. That's just me. There's no rule. You can do whatever you want. All right, let's go to the next question. When would you use cash secured put over a covered call? It's all about the numbers. Now, I would prefer a 2-to-1, like 2% on a cash secured put, as opposed to a 1%. Your strategy work in Indian or every market. Pandit, I can't read that name, sorry. I honestly could not tell you. I can find out, but it's going to take me a while because I'm not very familiar with the Indian market. Do I always do limit orders? No. I normally do market orders when I'm getting into something. What happened with DFS from yesterday? I don't know. Now yesterday was Tuesday. Wait a minute, today Tuesday? Yeah, today's Tuesday. Yesterday was Monday. Now, we looked at DFS, which is Discover, but I didn't jump into it. Oh, Matthew Williams, Realtor. You're a first timer? Cool beans. If you're selling covered calls, you need to miss it. Right. Okay, yeah. I answered that question. So let's keep on going. Pedro, ¿qué pasa, amigo? James, to be profitable like you, how much money do you need in your account? It's different for everyone. Okay, now you can start out with $100, you can start out with $50, you can start out with 100,000, you can start out with $1 million, you can start out with whatever you feel comfortable. However, if you're just getting started, I do suggest, now I don't tell people what to do and I don't tell people what not to do, but I do suggest if you're new and you've never done anything like this before, I do suggest you paper trade. It's kind of like playing Monopoly. Okay, you're not really risking anything. AC Messer, but SoFi, yeah, do me a favor, okay? AC Messer, go to a financial website and then look how often has SoFi increased their dividends every single year. How many years in a row? Krista, can we look at ExxonMobil? We can take a look at it tomorrow. Trav Percy. Good evening, Trav Percy. I'm going to sit down because I'm just answering questions now. Jacob, bullish on quantum stocks. All right. Me? Oh, that's a question mark. Oh, bullish. No, not me. I don't do quantum stocks because they haven't been around long enough. Stevie, James, you looked at Gap for April 25, not March 25. Oh, I know. The reason why March, we only have 3 days left. Wednesday, Thursday, Friday. So there's not going to be a lot of time value left. So we looked at the April. So instead of 3 days, we have 10 days. So 10 days of time value. Pfizer, we take a look at it tomorrow if that's okay. John D. What? Uh-oh. Johnny D. I got to go backwards. Where was I? Okay, right. Johnny D. What would you do for a Klondike bar? What would you do for a Klondike bar? I like Klondike bars. They're yummy. One thing I don't like about them, though, is when you, like the last 2 or 3 bites, it's like falling apart. Now, the first 3 or 4, it's like, yeah, nice and solid, meaty. Yeah, great. But then when you're on the last 2 or 3 bites, it's like the ice cream starts to melt and the chocolate falls apart. But you know what I mean. Peace and love. Good evening to you. What you up to tonight? I'm getting ready to call it a night and just relax for the next couple of hours. Maybe have a cocktail before I go to bed. Don't know. I started using the app called Benson AI for stocks. Have you heard of it? No. If you could do me a favor, send me a link. I'll take a look at it. Devin, how are you doing today? Mr. Wales, it's not free because you're a grifter. Thank you for that, Mr. Wales. They say you're not doing a good job until you get a bunch of haters. Okay, so I'm assuming with a comment like that, not a fan, but okay. Is NVIDIA in your portfolio? Oh my God. Did you even take a look at the numbers of NVIDIA? Seriously, what is NVIDIA? NVIDIA. NVDA. I can't really, say anything about NVIDIA until I see what it is. $120. All right. So Al Robotics. Or is that AI Robotics? I don't know. Looks like Al. Yeah, right. Vitas. Mr. James, you working for FBI? Female body inspectors? Hell yeah. Anyway, so NVIDIA. All right, you like NVIDIA. Nifty. Now, interesting thing about NVIDIA, it's $120. See it? $120 a share. Their dividend is 1 penny. So explain to me in a manner why it is you think 1 cent dividend is good on a $120 stock. That's just one. Second, the book value. The book value. Now, if you understand anything about a book value, okay, that is if they liquidated everything the company owns. Okay, all the computers, all the lawn furniture, the desks, the trash bins, the erasers, the pencils, the paper clips, the buildings, everything. You sell off everything the company owns and pay off all their investors and everyone they owe money to. That's called the book value. Okay? The book value is $3, and I think it was like $3.74, wasn't it? It was crazy. I'm not going to bother it. I don't like NVIDIA. Okay? 1 penny for a dividend on $120 stocks? Yeah, no thank you. Take a look at the numbers. Okay, what is the rate of return? What is the yield for the year? Andrea, HIMS is a growth stock. It does not fit James's model. Thank you, and no dividends. Andrea, thank you for that. Jersey, thank you. Appreciate your knowledge. I'm here every night, Jersey. Sean Bryn, how are you today? Okay, user 9279, whatever. Do you have a mentor class or subscription program that you advise on trades you are performing? Yes, I do. Now, I normally don't try to sell anyone anything, but considering you're asking, the 10-minute trader. Okay, see that? The10minutetrader.com. If you go to the home page, right there. Trading live online. We actually do a Zoom call every morning at 9 a.m. Okay? You get to see me trade 3 accounts. And you can ask whatever questions you want, and I'll actually even look at your accounts. So yeah, I do have a mentorship. Big Mouth Rob. BlackRock is the king of kings. BlackRock buys Canal for $28 billion. Okay. All right. So, Glumbug, good evening, and how are you today? Ale, good evening. Chandra P. Purple Diamond, interesting. Oh, look at this. Is that it? We're at the end of the questions. Quentin, good evening. Ale, hey, brother. How do you see... Oh, yeah, no. Sorry, I don't do Forex. Will do. Thank you very much. Javier, ¿qué pasa, amigo? Pete, what's going on? Pup of Wall Street. Hi. Are you a Momentum Day trader? No, I am not. Thoughts on T. Rowe Price and its associates? Thank you for the question. We can take a look at it tomorrow. I am done for the evening. Bright and friendly. Good evening. Good evening. The Devious Dingleberry. Well, that's interesting. VOO is a good stock. Big Mouth Rob, how are you? And you think BlackRock is the king of kings? Okay. Interesting. And you think VOO is a good stock. Okay, I'm going to respect your opinions. I may not agree with them, but I'll respect them nonetheless. All right, I answered every single question. Elias, are you a teacher? Yes, I am. AI Robotics, thank you for answering our questions. You're welcome. I'm out here for the night, and I'll see you guys again tomorrow night. So bye to Facebook, Instagram. You guys have a great night over there. Hope you learned something. You got to start asking more questions to Instagram people. And now, and done, and share, and we are done over here on TikTok. You guys have a great night. We'll see you again tomorrow. And there we go. And over here on YouTube, go find a different job. Why are you a teacher? Why not? Now, isn't that an interesting question? Why are you a teacher? Why not? Okay. See, Elias, what you're neglecting to take into consideration, information is only good if you share it. And as you're sharing it, well, then you become a teacher or a mentor or someone who helps out. Blackstone funding all the companies. No, they're not. They're funding a lot of the companies, but not all of them, because Jesus does not want you to be a teacher. Okay, Jesus has not told me specifically, James, I don't want you to be a teacher. He has not said that to me. So until he does, I will do that. Okay, I get it. Blackstone's worth a lot of money because a lot of people put all that money in there. Yeah, I don't like the company. The numbers just don't work for me. You can't go to heaven. Well, I'm perfectly fine not going to heaven. But thank you for that. Always nice having people.